Good morning, everyone. It is Wednesday morning, 30 minutes before the markets opened. And boy, it's been a busy week. It was a busy week last week, and it's been an eventful week with stocks really selling off yesterday. It was a doozy of a day, but I'm glad that stocks sold off hard yesterday, but they kind of regained some of their losses. I was good to see that. We'll see what happens today. We've had a couple of earnings that have been the situation where the earnings look good. AMD earnings look pretty darn good, growing 34% top line. And the forecast that I saw was pretty darn good, but the stock's down. Last time I looked, 9%. So what's going to happen today? Are we going to have a sell-off? Uber announced this morning. We're going to go over that, and their stock's under pressure. Looks like Mike, the dividend investor guy, is on with us, and he's commenting that Applovin's falling like a rock. Oh, man. Applovin getting hit, and software stocks took a beating yesterday. Jeez. And software stocks for the last couple of years, the story that is either going to be proven, unproven, or maybe a combination of, yeah, it's going to change, but not that dramatically, or maybe it is that dramatically, is that AI is going to really disrupt those companies. And the market has it in its head. It's afraid of software stocks, and it's really punishing my stocks, which is pretty hard. I am joined by my colleague, Daryl. How you doing this morning, Daryl?
I'm doing great, Victor. It's good to be here. Hello, everyone.
It is great to be here with you, and looking forward to seeing your technical analysis on stocks that we cover, going over how things are setting up. Volatility. Now, volatility is my friend. I like when companies that I want to own sell off and I can buy them at really good prices. But how does volatility make your process? Does it make it easier or harder?
Well, that's a good question. I think it makes it more challenging because the ups and downs, you struggle with some decisions when the volatility's higher. I do see that it's sitting at around 18 right now. We were as low as 13 at the end of December during the holiday period, and we've been slowly climbing up. We had one spike up to 20 on about the 20th of January, and currently we're sitting at around 18. We're above the 200 period average right now. So we've climbed above the 200 period average. Let me turn on my mouse highlighter there for you. So we're sitting above that average. We moved above the 50 period average a couple of days ago. I'm also noticing on the put call ratio that we've had this steady increase in the 5-day moving average of the put call ratio. So the VIX is set by market makers. The public really doesn't have anything to do with that. So they establish that on the VIX. The public really controls this CBOE put call ratio, and I can see it's above 55 right now. So people are beginning to buy a little bit more insurance to protect from a downside decrease. So that aligns with what I'm seeing on the VIX as well. So anyway, it does make it a bit more challenging. There are times when if I see especially the SPX or the QQQ, if I see them moving up or down in a day, I'll buy a put or a call just to grab a couple extra $100 during the day. So it's kind of fun to watch, but it can be challenging at the same time.
I agree. It is, it really, I try to focus on really down days like yesterday where, the market sold off so harshly. I did buy quite a bit more than I typically do. But it, you know, some of my stocks were getting slammed. It's like, okay, here we go. So get back to my process. The stocks that I want to buy, I keep buying them. I probably bought some stocks that I wouldn't have bought if a market wasn't selling off so harshly. But, like I'm buying into Amazon as an example. I really bought into Amazon yesterday. And if we have a day like that today, I will reload and do the same thing. Now, getting into cash, right? I like doing things and it's pretty much like not what everybody else is doing. Like back when we were on highs, market highs, just a couple months ago, I was selling some positions, selling some of my Robinhood. And I love Robinhood. It's made me so much money. Um, but I was creating cash. I didn't want to be close to, 1% cash. I wanted to be higher, like 4%, maybe 5%. And I did that. And now I've got some cash to work with and I'm concentrating it into positions that I want to grow, like Amazon has mentioned and a couple of others. So now's kind of a tough time to create cash
I
because
I have raised some cash as well. I want to take advantage of a pullback when it happens because I'm certain it's going to happen at some point.
yeah, and this one here, I think it was I think it was the last earnings that we 3 months ago that we dealt with. We had situations where the earnings look good, but the stocks sold off. I'm seeing that in AMD. AMD, I looked at their earnings. I think their earnings were really good. Um, Here's what I think is good. They're going to accelerate their growth in 2029, 2026, 32%, 2027. This is the year that I really wanted to point to is almost 40% growth in revenue in 2027. That's next year. So good growth this year, more growth next year. And the kind of explanation that I'm hearing out there is not completely like convincing to me. I think the market's finding an excuse to sell. It's selling off AMD. I thought their earnings were really good. The top line revenue is growing really well. Look at the profitability line. It's really growing. I'm not an AMD stockholder. Um, so I looked at that and I'm like, huh, interesting. That's a pretty harsh sell off. I don't see, like, for example, the stock that I agree with is PayPal. Earnings come around. Hey, we're replacing the CEO and we can't grow the business. Yeah, you're down 20%. That's completely rational. Can't argue with that. I'm good with that. I'm accepting of that situation. But these lead me to believe as a market participant, as an observer, is that I think investors are feeling a little less confident, maybe a little more cautious. Like, you know what? Let's take some chips off the table because AMD has flourished. AMD is not a stock where it's like, it's barely making a rate of appreciation. It's up 108%. So maybe the investors are like, you know what? I'm going to go ahead and cash in and lock in that gain. I don't have to pay taxes on it for another 11, 12 months at this point. So I could probably do better in cash if I cash out my AMD stock. Any thoughts on AMD while we're at it? I'll show my valuation on it. Maybe you can preload the charts. We can get started on AMD and see what that stock's all about.
Okay.
AMD has historically been kind of the player that always was trying to challenge Intel, and Intel is so darn powerful, and it never got there. And now NVIDIA leapfrogged everybody, and now AMD's trying to catch up to NVIDIA. So it's fairly priced according to my analysis. It's up 108% before this market drop. So I don't think there's a big opportunity in AMD. I actually think Nvidia is priced at a discount right now. Actually, so for me, AMD is not a buy, but I salute everybody who invested in Nvidia. Good job. You made good money, and I hope you keep making a lot of money on AMD. Let's flip it over the charts. See what Daryl is seeing around AMD.
Well, we had hit a peak back in end of October, and then there was the big sell-off in November and December. They came back up and tested that level once more and have been declining just a bit. They were oversold. We did have somewhat of a bearish negative divergence here on the RSI. They are trading above an upward sloping 200. The 21 days still increasing. Looked like yesterday they at least came down and tested that 21 day. The 5-day has rolled over and is declining. We look at the weekly view. The RSI is still pretty good. It's sitting at 60 right now, but we did have a sell signal back on the 17th of November. And then I agree with what you were saying. If we look at fast graphs, we're looking at AMD here. They're trading quite a bit above their normal market multiple, and they're trading a lot above their fair value that's calculated by fast graphs. So it would have taken a blowout and a pretty high raised guidance for them to increase from here, because they were testing a double top.
Nicely done. So if you're done, sir, we'll turn our attention to the chat real quick, because once again, last time we streamed, a lot of people attended, which is the case this morning, and the chat was just blowing up, and it's blowing up again. Good deal. Thanks, everybody, for joining this morning. Please keep it coming. I'm going to try to do a quick sweep across all chat just to make sure I don't miss anything. So Mike is all over the chat. We're going to look at Applovin. Mike, and I think somebody else was asking about Applovin. Looks like we have somebody from Romania. Awesome. I would love to visit Romania, by the way. I will visit, is it Count Dracula's castle is in Romania? But I'm going to do it in the daytime. I'm a little bit of a fraidy cat when it comes to that kind of stuff. And I would love to visit, 100 places on earth, and Romania being one of them. Jan, very good to see you. Yeah, cash is looking good right now. So, but, sitting in cash too long is not a good idea, but having some cash around right now is a very good idea, because you have some of these pockets of opportunity. And let's keep going. Peyton joining us on X. Good to see you. What am I thinking about Uber earnings? I'm thinking quite a bit. I created a video. I released it minutes before this stream started. It has my thoughts in there. It's more than 10 minutes, and I'm going to repeat some of that on this stream. I'm going to, kind of summarize it on the stream. And I'm glad I recorded that video when I did, because, and I'll get to that point later. Russ Moments, good to see you. Mike, volatility is one thing, but when you see your portfolio drop, yeah, I get you. Genetic Smite, good to see you. Sam, good to see you. We are going to cover Applovin. I'll tell you what I'm doing with Applovin, what I've been doing with Applovin. Genetic Smite, we're going to cover Uber, as mentioned. And then PayPal, yeah. It's tough to see management really blindside us. I agree. And I think PayPal is uninvestable for a while. We'll see how the new CEO does. And Mike has had a good run with AMD. I know that. Mike's a regular. He's been in AMD. I watched him make that 100% rate of appreciation, and I'm glad for him. Nicely done, sir. And we are going to Go over Uber. Man, Uber is on our minds. Good deal. Dwayne, good to see you this morning. DJ, great to see you. Super Microcomputer is making some news. They had, I think, a positive report. Let's take a look at that. I certainly have an opinion on Super Micro. All right, so I caught up on the chat. Let's roll. Let's get going here. So the market is not open yet. Let's get things started with Uber. So when I created the video roughly an hour and 15 minutes ago, the stock was under pressure by about 5%. And I analyzed the company, and here's the things that I came up with is I really like the growth. Okay, the growth is good. And when I said that, I was thinking of Gordon Gekko in Wall Street, the movie. You remember that movie, Daryl?
Which one?
Wall Street, Michael Douglas.
Yep.
Greed is good.
Yeah.
remember that line? Well, I'm saying growth is good, kind of like Michael Douglas saying greed is good. Growth is good. Growth shows that, hey, Uber is liked by its customers. Its brand is really making it work in the markets that they're targeting. And when I drilled into their growth, here's another thing that I liked is their food delivery is growing faster than mobility, the ride sharing. And they're almost at the same revenue level. So pretty soon the food delivery, and it could be delivery of other items too, by the way, is going to surpass mobility. I like that diversification in Uber. It gives me an advantage. I used to own DoorDash. I did well with DoorDash. I sold DoorDash. I sold it. It went up and then it came down quite dramatically. And I think DoorDash is a one trick pony, one type of business. And I think it could do well, but it doesn't have a solid diversified, portfolio, kind of like a Google has different businesses. They do great at them, but they have different businesses, even the great Amazons that way. So I like that about their revenue. They're growing the food delivery faster than mobility. Mobility is growing about 20%, and the food delivery is growing above 20%. So that looked really good. And what makes, Uber a special, different company is this cash flow generation. Uber doesn't have to buy cars. Drivers show up with their cars. They don't have to maintain cars. If the transmission goes out on that Toyota Camry that a driver is driving, the driver pays for the new transmission. So that type of real organic growth without having to put capital in the business is the big difference maker, as well as the fact that, does Uber have to have mass layoffs of drivers? No, because drivers show up and they're contractors, they're gig workers, and that's also a big advantage. Okay, so capacity is filled by people that want to make some money in that particular market. So I really like that about the sharing economy, the low capital that it takes to grow the business. Sometimes these businesses are growing, real fast. For the data center as an example, a company that has a big data center or maybe many data centers, they have to grow. Well, they're putting a lot of capital back in the business. Just ask Meta. Man, they're putting gobs of money into these data centers. Well, Uber is not having to do that. Now, this is why the market was a little bit disturbed, was the profitability did come down, but this was a known commodity. We already saw that. I've been seeing that for 6 months. So it's not new news. It's just an excuse to maybe sell off. So we're going to have a little bump in the PE ratio, but it's going to come back down next year. So I'm cool with that. So overall, what I concluded was I'm going to be buying shares today if it's, selling off. It was selling off of 5%. So my conclusion was, I'll add shares. And it's a big position in my portfolio, folks. It's not a little position. If we look at Uber, where is Uber? 4.4% of my portfolio. That's a big position. We're talking that's over 100 grand. So I'm willing to go higher on my investment with Uber and buy some shares. When I look at the valuation of Uber, let's take a peek at that, and I'll show you where we're at with Uber. And I also, in the video, by the way, I developed this app and it does valuations. And I use the app in the video. Check it out at the very end. The app did a pretty good job. Now, I think it's discounted by 59%. I did the full analysis, updated every single number. And on cash, the value of the cash is 65% of, it's 65% higher than the current stock price. And on earnings per share, 35%. And this is using the forward PE ratio, which FYI, that's a very conservative way of looking at it because they're going to see a dip in earnings per share for 1 year and then a rise. If I were to do what the app did in my video, I think that's more correct because it's actually looking 4 years out is the way I built the app. That was a methodology. And that gives me a higher valuation, but I'll go with the conservative one. Overall, 59% discount. Sign me up for more shares. Sign me up. Where do I buy? Where do I buy more shares? Let's kick it over to Daryl to take a look at Uber.
Okay, so we've had this auto support resistance line, which I don't know how far it goes back. We can double check here. Quite a ways, actually. We'll just go back through 2024 because this is a point that had been tested many times, and then they ran above it for most of 2025, and now they're back testing that level again. Let me go out 10 years. So yeah, it was a 5-year view that we were looking at when we set that level. They had been on an uptrend. They broke down below that uptrend. They've been trading below that since. They've been trading below the 200-day moving average since the 10th of December. The 50-day is declining. The 21-day is declining. Given that they have closed below this support resistance line, if today is Wednesday, if they are below that still by Friday, then I think this target comes into play, which is around $71, and that was set back on the 4th of March. So I think that'll be the next level of support that we'll find. If they break down below that, the April 7th could come into play, but I'm not looking at that real forcefully at the moment. I think 71 will be a good support. They haven't really been above a 60 RSI, wow, for a long time. They just a day or two. So basically since July, they have not been above an RSI of 60. They are currently below 40 at 35. We basically been on a sell signal since about the 14th of July as well. We're in bearish territory. We look at the weekly view. We have an RSI of 39, so that's right at the 40 line. And we've been on a sell signal, I would say, since about the 21st of July. Money flow is currently negative, so I would not be surprised actually to see that 71 come into view here. If they stay below that auto support resistance line through Friday, I think we'll get down to 71.
The stock has gone up more than 1% since you started talking, Daryl. So maybe we could just keep talking about Uber. Oh no, it's coming down. All right, we can move on. We can move on. But it is positive to see that the stock was under pressure in pre-market, and now it's doing okay. But this market, I mean, it is early, folks. It could really, like yesterday, it was pretty harsh, man. And software stocks are just getting destroyed, man. Just getting pummeled, run over by a truck, followed by a steamroller. And then the garbage truck pretty much is coming through. The street sweeper's coming through and just sweeping up what's left over. It's really, really just flooring to me because this is a space that I've been surprised with. But you know what? I'm gonna observe the market, remove my ego, and see, okay, how could I adjust? Because this is just this has been probably the biggest money losing spot of my portfolio. So I've got need to adjust. The money making part of my portfolio has been energy. Man, I made a video on material stocks 2-3 months ago saying that, hey, they're set to do well. I do have one material stock, but not enough. I should have bought more. And because it's been a good space. Also, consumer staples. I have been stepping up and buying, staples. And importantly, I didn't buy them like, oh, okay, now they're starting to rally, so I'm gonna buy them now. No, I've been buying over the last, 4 months, trying to pick the right places to buy them at, and that's beginning to really work. So the stocks that are not working, um, I think software is probably the place where capital is currently being tortured. It's being abused. It's being waterboarded, even though that's illegal. It's being waterboarded down there. So we'll see when that stops. We've got Nvidia was under some pressure yesterday. Broadcom. I'm interested in seeing how, when the market opens, how this is gonna flow. So interesting days with markets selling off. We're gonna move over to Applovin. Applovin has just, oh my gosh, look at that, down 11.5%. And I held my nose and sold additional shares. Now, I've been saying this for, I don't know, a couple weeks, is maybe close to a month, is I needed to get some of my communication services stocks off the table. I mean, communication services, 24.4% of my portfolio is in that sector. So that's concentration. Does it keep me up at night? No. But I do have to show some discipline. So I looked at the 4 stocks that I own in that space, and I voted one stock off the island. The one that got voted off the island was Applovin because of its volatility. And really, the other big picture item that I thought is going to hurt it is we're seeing AI really come into the picture and really change things for certain software companies. And Applovin's an ad tech company. They help businesses advertise correctly on Facebook, Netflix, Amazon Prime, even on Amazon itself. And I think it provides a really good service, but AI is going to probably be a big play there, meaning that, hey, Meta provides an AI engine that customers can probably use to get the most return on investment out of advertising on Meta. Same thing with Amazon and so forth. So I think that's going to be a potential big threat to Applovin in the future. So that's why I decided to start selling Applovin. I've been selling it and reporting it to my super users that subscribe and putting in my sell plan. I dollar cost average in and a dollar cost average out, but I'm probably through 65-70% of selling my shares of Applovin. I'm going to continue to do that. I held my nose and I sold yesterday because it's always tough to sell when a stock is down. But boy, am I glad I did that, at least for a portion of the shares. And I'm going to continue to sell because I think Applovin has been a really interesting stock at times, right? If you bought it at the right times, boy, you were enjoying the gains. But look at the volatility. Holy smokes, this one's a volatile stock. What's impressive about this company is its revenue growth. Its revenue growth has been sensational, pretty impressive. Look at that. This is like Plantir level stuff, and it's really, really impressive. What's also really impressive is their margins, really high free margins. Now, it's selling off so harshly, it's going to be discounted, but I'm looking forward to hearing what Daryl has to say on this stock, because this one's where, is this a falling knife? How do you buy a stock that's so darn volatile? It was trading at 700 in the last couple months, and now it's at 461 and dropping. It's dropping 15% as I speak. Geez, man. So how do you wait until it kind of gets a little more, stable, or do you go for it? I'm looking forward to hearing what Daryl's going to say, because this one here is probably an advanced edition of how to look at a stock and buy it at the right time. For me, this is a falling knife. There's trouble. There's blood in the water. The sharks are circling. Maybe the sharks already took a couple bites out of Applovin here. So, as mentioned, I think the stock's going to be highly discounted because they're cranking out a lot of cash flow. And when you crank out cash flow, you make your company more valuable because you keep loading that balance sheet with cash. And it's actually worth, I think, $852 per share if they keep growing at the rates that they're growing. But it's not doing the trick right now. And there is some situations where, the discipline of managing portfolios, I have to keep doing that because sometimes I force myself to do the right thing and it ends up being the right thing. And in this case here, I'm glad that I voted one stock off the island. I like them all, but which one I guess like the least? And we started to sell off Applovin. Let me kick it over to Daryl. Let's see what he has to say on this one. This one's going to be a tough one to read the charts, I imagine.
So anyway, this is one we've talked about before. And one of the things that immediately came to my eye, and I just drew this line just a few minutes ago, but we see a bearish negative divergence. So we had highs, reaching highs that we saw back in September, but the RSI was much lower. That was definitely a warning sign. And then when we break below 50, I mean, that's two warning signs. We break down below 40, that's three. We had a bearish negative divergence on the PPO. We've had a sell signal on the PPO since the end of December. Since that point, we're down 32%. The 21-day rolled over at that time. That was another warning sign. 50-day started rolling over a couple weeks later. And they are trading below a 200-day moving average for the last 3 days. This red line here was green, so it was a support level, but they've broken that. They've been below it for 3 days, so now it's resistance. I freshly drew this green line. They happen to be trading right around that today. That green line is tied to the high we saw on the 11th of August, so that is a support line. If that fails, we have another one here. We are oversold at the moment. The PPO is getting worse. It was improving for 2 or 3 days, which was basically a head fake, and now it's getting worse. Move to the weekly. They broke down below the 50 line on about the 12th of January. They've been on a sell signal since the 6th of October. Money flow is still positive at the moment. Accumulation still looks good over a 3-year period, but I'm seeing we're starting to get some capitulation right here, it looks like, because we're seeing a lot of distribution here over the last month or so. So this one's been rough. I don't necessarily see a quick recovery. Oh, wow, look at that. It's broken down below those two resistance lines or support lines. So I don't know. I don't know how far to go down.
It's a rough one. It's a
Yep.
difficult one.
Yep.
I think Applovin is and the conditions we're under with, software stocks just getting smashed. It continues, folks. Software stocks, they got run over by a truck yesterday, and now they've got run over by a herd of buffalo. Look at that. Man, just keep going down.
I'm seeing a gap back from about May, the first couple of weeks of May, that could definitely looks like it's wanting to be filled. That'd get us down to about 305 on app.
So to me, Applovin's like, for this investor, it's just too risky. Is he going to, what's the market going to do to it? I don't know, but I'd like to see it start to trend higher. It's going to announce next week. It's going to announce actually a week from today, and we'll see where it goes from there. But I'm just going to keep selling my shares. Um, I'm gonna get this off my portfolio today, or excuse me, sell some of the shares. I'm probably going to sell the remaining shares over 3 orders, and we'll see how that goes. But Applovin, I think the question was asked, do I see it recovering? The answer is maybe. How's that for conviction, huh? And here's the maybe part is the AI risk to software companies, it's real. The market's telling me. I happen to have really good experiences and knowledge of software. Got it. But maybe my knowledge is, I was taught software like 35 years ago. I've been, part of development teams. I've been part of software teams. I've been working with clients with their software needs and so forth. And maybe that's really changed. So I got to take a step back and kind of be a student of the game and understand how it's being impacted. Back to Applovin, they're a software company. They write code. That code enables their clients to advertise best on the channels that they should be advertising on. If that whole application stack is being changed, disrupted, moved on to an AI, code base, or maybe an AI function, does it take away a lot of their revenue? It most certainly can. The market's certainly afraid of software stocks right now. And I'm not putting more money into software. I don't know where the bottom's going to be. It could be one of the best opportunities we're going to see for a while, or it could be a very big lesson that I get taught. I'm not gonna fight the Fed, and I'm not gonna fight a very clear market move. This is not a move that happened overnight, a couple of days. No, this is like a 2-year move. So that's where I'm at with that Applovin. Got to get out. Got to get out. The building's been engulfed in flames. Got to get out of the building. The roof's going to cave in on it. Now, looking at the market, Apple had good earnings last week. That's what I concluded. If you recall, I thought it was pretty good earnings. And telecom's doing well. Some parts of industrial are doing well. Consumer staples doing well. And energy picking up a nice bid. Materials as well. Eli Lilly flying high. AbbVie, man, in the penalty box. AbbVie is down. All right. Home Depot's up. Lowe's is up. The banks have been rallying recently, which has been interesting. And so has Verizon's been on fire. Those who own Verizon, congratulations. All right, let's keep moving. We covered Applovin. Somebody had asked about Super Micro Computer. Super Micro, man, this stock chart is a doozy. Let's look at the max real quick. Look at that. Woo-hoo. Look at that. This is like in California, this is like a 7.2 earthquake. You don't want to experience that, by the way. And you don't want to experience this if you bought Super Microcomputer at one of the highs and ended up getting a lot of your capital taken away. But last year it's up 26%. But look at that. This is like right with Applovin. These guys ought to go meet and kind of support each other. Look at this volatility. Woo. Incredible. Market cap's 20.5 billion. These guys make premium servers, premium computers that are going into data centers that can handle high performance workloads. They put NVIDIA GPUs in them. They put all the fast. It's kind of like if you think of cars, Super Micro is like one of these low unit brands like Shelby. Remember Shelby back in the day that came out with the Cobra? Only a couple units were made, but there was a great car, really fast for its time and so forth. That's what these guys do. They create computers that are really fast for high performance compute. And right now, that's really, really a necessity so companies can build their AI large language models and associated workloads as quickly as they can. And they announced their earnings. Their forecast was more favorable than the market expected. The stock is flying high, but this one is, if you want to take chances and risk, I've got a stock for you in Super Micro because these guys, it is, what do you believe is going to happen? And these guys have been sold off quite a bit. When we look at their forecast, we're in the year that's going to end June 30th, 2026. They're growing at 67%, but then their growth is going to slow down. I think this is kind of a scary thought to be in super microcomputer because if you slow down, especially if spend in the data center stalls or if competition comes into the picture and says, hey, we can do everything super micro can do and we have a better price, then super micro is going to suffer. Hardware companies are not going to maintain high margins for a long time. Hardware is a commodity. It gets overly competitive. And super micro doesn't have very high margins to begin with. When we look at the margins of these guys, 8% gross margins. Okay. Applovin was at like 80%. If we look at other businesses like NVIDIA is close to 80%. And these guys are at 8%. And it's been dropping. You see how that's been dropping? That to me is a big, big problem. This is competition. This is competition from Dell. This is competition from others that are like, yeah, Supermicro's a little faster, but they're a lot more expensive. We got something that's equivalent and we can host that workload and get you the performance that you need. And Supermicro is probably both two things. A, lowering their price or maybe maintaining their price, but things like memory, those prices are going up. So it's eroding their margins. So that is not something I want to get involved with. I like high margin businesses. I like businesses that just generate cash flow. They generate a lot of cash flow, and these guys are not that business. The cash flow is not consistent. It's pretty much, what's going to happen this year, and that's going to be an isolated event. It's not going to be a trend. Hey, that's going to represent the next 5 years. No, that's not super micro. So it's not a business that I would invest in. The market is buying it up. I don't know that I have a valuation on super micro. I'll take a look, but I'm going to kick it over to Daryl. Man, we're giving Daryl some really tough assignments today with Applovin and super micro.
So we have a couple of downtrend lines here. One from the peak at the 10th of December, then the 3rd of November. That one stretches out and currently sitting probably around $37. Then we have this lower downtrend line, which is connected to this peak on the 23rd of January. It is breaking above that today. The 50-day is trying to roll over and move upward now. The 21-day has done something a little odd here. It's you don't see too many charts that has a 21-day that looks like that. But it is turning back upward and they're trading above that. And the 5-day is also moving higher after downtrending since the 23rd of January. The RSI, they haven't really been above a 50 since the midpoint of 50 since about the 22nd of October. I see maybe 1 or 2 days where they got up above 50, but it quickly pulled back, came down and touched the 40 line, and now they're, as we speak, they're at 62. So let's see here. The money flow is getting into bullish territory. The distribution doesn't look too terribly good. This is a 1-year chart, and we're basically at a 52-week low. So this one has some work to do. If they can break through this trend line here, which is sitting about 37, they're immediately going to face resistance at the 200-day moving average around 41.
Thank you, sir. So I do have a valuation on Super Micro, and I just updated it. The stock is a riskier stock. I don't know that anybody's going to argue with me on that statement. And they are going to carry a higher discount rate that I use when I model it out. Higher discount rate, like let's say Nvidia or a Meta or a Google, they're going to be at 7.5. They just have really strong balance sheets, really proven businesses. And Supermicro's had their struggles, right? They had their auditing accountant decided to resign. That was a big problem. Their revenues are not as, you know, dependable as I would want. So it's going to be a higher discount rate. Their growth rate, 10%, I think that's fairly accurate if we looked at the forecast. I'm using the trailing 12 months to model out their cash flow, and I just can't get there on cash. And that's what's going to hold me back. The earnings per share, yeah, they could probably deliver an earnings per share that could, align with their current stock price, but that's just not enough. I think it's priced 34% too high, not offering me a discount to jump into the stock. And I wouldn't want to jump into a stock like this unless it was a really good opportunity where I think, hey, they're going to have better days ahead, maybe over the next year or 2 years. And it's giving me a nice discount, maybe 50, 60%. That's not the case here. I think days ahead could be quite tough. It could be quite tough for Supermicro. What if we have a slowdown of the data center? They're going to get crushed. Competition could come in and take some of their business away. The prices for this technology keep going up and eroding their margins. Just a lot of things can go bad. So for me, it's an absolute stay away. Stay at a safe distance away from Supermicro would be for me. Now, if somebody else is making money on it, good for them. Good for them. That'd be great for them. All right, so that's Supermicro. Wanted to answer that call. And let me check in on the chat after I take a peek at this heat map. What's going on stock market? Looks like Apple is picking itself up. Look at that. That's really good. That's really, really good. Google's up a little bit. Meta in the penalty box again. All right. Looks like industrials, some of the industrials are picking up a nice bid. All right. We're kind of where we were at before. One thing I want to check in on is, I'm like kind of like similar to sports. I like looking at who is leading the pack, what is going on. Look at that. This is becoming closer and closer. Google getting to Nvidia. One of the things that I said probably about a year ago was I thought Alphabet, maybe I said it a year and a half ago, was going to be the most valuable company on the stock market. And I probably got a few laughs out there. And here it is. Here it is. Look at that. They're getting closer. If Google announces later today, man, that'd be a good conversation piece. What do you think is going to happen later, Daryl, with Google?
That's a good question, Victor. They are looking strong for the last 6 or 7 months. So hopefully the market treats them well if they report good earnings.
I think the Gemini story is going to send this stock higher by 10%.
I think it could.
Yeah. What's your implied move on? And I'll give you a few minutes.
6.1.
Look at you, ready to go. Look at that chart. Jeez. Look at that chart. Beautiful chart. Let me take that in because it wasn't always beautiful. This stock was obviously in 2022. Everybody got a haircut. But back here, the market was like, yeah, Google schmoogle. OpenAI's got their number. OpenAI is going to take these guys out. And I just didn't agree. I thought, market's nuts. The way I view Google is they are one of the most valuable, powerful companies on earth. And they got there by earning it. It's not like, hey, they just were fortunate, right? No, they created search when there was 100 search companies, but they created the best one. They created it through excellent innovation and so forth. YouTube. Most of you are watching us on YouTube. Here we are. They don't have to make any videos. They don't have to have a studio. Why are we going to have a studio? That costs a lot of money. It's risky. Instead, we'll have everybody that comes to YouTube as a content creator, whether you're a big studio, small studio, independent guys like Daryl and I create content. Beautiful business. And their cloud business is doing great. Now they have Gemini along with Waymo, which is physical AI. So that was this has been the biggest dollar for dollar moneymaker in my portfolio. I wanted to keep going higher, Google. Let's go to 5 trillion. Let's go to 5 trillion. You could do it, Google. Just take a look at their forecast here. We've got this year, they're supposed to, and I'm going to break open the quarterly. When we look at the quarter, look at that quarter. They're already doing more than $100 billion of revenue per quarter, not per year, per quarter. And they're going to go, hey, you know what? We are accelerating. Everybody, seatbelts on, because we are going to pick up some speed. And that is impressive. They come in with a 19% growth. And what I also like about Google, and I like this about Amazon, some companies kind of promote like everything that they did right, and they kind of sensationalize it a little bit. Google doesn't do that. They just put out the facts. It's almost like a humility, because they know how hard it is to create some of these businesses, and they know how strong their competitors are. I want them to operate like that. That's the right approach. That's the right philosophy, mentality. But boy, if they come out and say, oh yeah, FYI, I know that I heard this story. I don't know if it's true and how true it is that in the last couple months, they've taken 15% of ChatGPT's user base over. People have gone from Chat GPT to Gemini. 15% of that user base has migrated over to Gemini. If that's basically the case, it's excellent news for Google. And so they come in with 19% growth. They put up their massive cash flow numbers, and they talk about how their expansion. Waymo is now a company that's worth 130 billion dollars on its own. So just things are looking really good for Google. Excellent. Keep rolling, Google. And I have a valuation on Google. It's the biggest stock in my portfolio. It's gotten there by me investing in it, trying to find the best times to buy into it. The market gave me really nice discounts a year ago, but the discounts are not there anymore. 18% discount on the stock. And that's a good discount on a really important business, but it could change if we get guidance out of Google that says, hey, you know what? This AI string of businesses we think is going to be the catalyst to create one more massive business. So we're going to have search, we're going to have YouTube, we're going to have Google Cloud, then we're going to have this other category, and it's going to be as big as search. I think people's heads are going to explode, and the stock's going to go higher. And I'm going to have to qualitatively think about my modeling and say, I got to put that into my model here and see what's going to happen, because these guys have the technology, they have the momentum. That's how I see it. And that's how I've been seeing it for 2 years, by the way. You guys know me. You guys have been hearing about me on Google. And that's where we're at. Let me kick it over to Daryl. What are you seeing on the charts, Daryl?
It's a thing of beauty. So I do have a few concerns, and I've shared these in my weekly chart reviews that I publish over the weekend, but I'll cover some of it here. So back at this high we saw on the 4th of February, we had the sell-off for the tariff news, and we had established some downtrend lines, which they started breaking out above those. I was buying myself back in this time frame. I thought the story was a little overblown about their search being in jeopardy, and that has turned around quite beautifully. I'm going to go to just 1 year. Then we have some where they broke out above that high on, must have been on an earnings on the 3rd of September. And then we have a couple uptrend lines, which they have broke above, and they're even trading above this upward sloping trend line. So the couple things that I've been concerned about, despite them setting all-time highs quite frequently here. I think the latest one was on the 2nd of February, so just a couple of days ago, they hit an all-time high close. They are trading about, well, they're trading right below an upward sloping 5-day. They're trading above an upward sloping 21-day, upward sloping 50, and an upward sloping 200. One of my biggest concerns is they are basically, let me go the other direction. They're basically 42% above that 200-day moving average. And this 200-day moving average is going to act like a magnet or a Earth to the moon. It's kind of a gravitational pull. It's hard to stay extended above those moving averages for lengthy period of time. And if I went back in the chart, we'd see plenty of times where they were trading below the 200. So this is an average. You have to trade below it at some point for it to be an average. So that's been a concern. They're also about 5.5% above their 50, not too concerning there. I've also pointed out for the last few months how they have this bearish negative divergence on both the RSI and the PPO. So I haven't sold any shares, but I'm watching all of these things that I just mentioned because it's concerning. The accumulation was at a 52-week high on the 2nd, so Monday. We've had a little bit of distribution here. The last 2 days look like we're selling off a bit going into the earnings. Google looks really strong, but I have some yellow and red flags that I'm watching on Google.
Yeah, it's risen so much. It's really gotten a lot of support, a lot of investment from a lot of people. I think when I look at super investors, Google is held by a lot of super investors. It is, but how much more investment do I see? If everybody owns it, who's going to buy it next? That's, I
Exactly.
think, part of the conversation. So let's see what they announce later today, and we'll go from there. All right. So the list that I've got of stocks looks like I scanned the chat. We got a lot of people on today. We're going to move on to
We should mention that we're having a live stream on Google, so we can look at their earnings live this afternoon. If everybody wants to come back and visit us again.
Tune in 4 p.m. Eastern. We're going to talk Google for extended period, and we're going to see the earnings drop. We'll take a look at the earnings report, live. We'll take a look at it. We'll see how their stock reacts. So tune in later if you'd like to be a part of that, or you can watch it on the recording, but it'd be great to have you in the live version. We've had a lot of people on these watch parties, pretty incredible. And I'm expecting a lot of people will tune in this afternoon. It'd be great to have you guys. All right, so let's move on. I'm going to go over to DVA. That's Davita. These guys do dialysis. So folks that need to go in for dialysis and that kind of treatment, they go to a Davita location. They announced a couple of days ago. And what's the stock been doing? It's been going higher. Look at that. And this is a stock that I think Warren Buffett owns. So he's probably, or whoever manages the portfolio is probably happy with the stock this week. It's gone up nicely from $110 a share up to $140. Very, very good. So these guys operate those types of locations. Let's take a look at what's been happening. So they are growing their business, 6.46% growth. And if we look at the quarter they just announced, almost 10% growth. So that's why the market really liked the stock. Now, the situation is that over the last 5 years, this stock has been okay, but it's just okay. And it's been really selling off for, it looks like well over a year it was selling off. And it's now caught a nice bid there, but it has sold off on a few occasions. Now, this is a business that has pretty decent growth at this time, and it has cash flow. Its gross margins are not going to set any records. It's just good, solid gross margins. They have to operate a lot of properties, employ a lot of people, and so forth. And they do have a net profit margin as well. Free cash flow is decent. So all really decent numbers. This is a discounted stock. And do they pay a dividend here? They do not pay a dividend. When we look at the forecast for these guys, 4 analysts are covering. They say there's a small discount and the growth is going to continue. So this isn't a bad stock, but boy, that move makes me think that it's probably priced close to fair value now. And this is not my favorite investment. I wouldn't want to invest in this. I just don't feel comfortable in it. I think it's somebody else's investment. I don't want to buy a low margin business like this. Taking a look, I'll take a look and see if I have a valuation on Davita. But for now, let me kick it over to Daryl.
So the last time we looked at them, they had been on a downtrend. Let me go back one more year. Since their high on February the 4th of 2025, when we created this downtrend line and connected it to the peak we saw at the 24th of July of last year. And they are breaking out above that today, and they also broke out above the 200-day yesterday. So that looks really good. They're going to face resistance at the next point that I see here is about 151, but they're not very far away from that. They're only about 5.7% away from that. They are in an overbought condition. PPO looks really strong. I see accumulation starting to pick back up and money flow is back positive. I don't know if this will continue to run, but I think it'll face some resistance at around 151.
Thank you, sir. So I don't have a valuation on Davita. Davita is, I think, a good part of what I expect the stock's going to do is priced into the $140 price target. It's not a bad stock given the conditions where investors are moving out of tech, but I see that I'd rather own CBS. That's the stock that I own. I see way better fundamentals. These guys are a necessity. I will give them that much. But the stock had been languishing, and now it's picked up a nice bid in the last couple of weeks. So that is Davita. Next stock we're going to handle is Reddit. And I think Reddit has been providing some really good pricing, especially today. Oh, man, look at that. These guys are going to announce earnings tomorrow. Look at that sell-off. Holy smokes. I am not buying into communication services, but this is an opportunity in my book. These guys are a stock that continues to grow. And if we look at their growth rate, this is a high growth business, 69%. That is a high margin business. Gross margins of 91%. Profitable. Okay. So these guys are pretty exciting, pretty darn exciting. And when we look at their forecast, what is wrong with a 39% growth rate, 30%, and then 21? I just showed you their gross margins, bringing down their PE ratio to the 20s. A business that is that profitable, generate that kind of cash, growing at these amounts. This is a buy all day long for me. Man, the door, somebody's knocking at the door, and it is opportunity time. 37% discount. And I'm not buying into Reddit because I own a lot of Alphabet, Meta, and I own Reddit. And I'm going to listen to their earnings. I may buy a few shares, but I'll have to sell some shares of Meta or Google Alphabet because I need to get that communication services bucket to be a little smaller. Let me kick it over to Daryl. Talk about Reddit.
So they IPO'd in April of 2024. We have this auto support resistance line that's connected to this series of highs that we saw. They broke out above that, and now they're coming back down to test that. So they broke out above it on the 4th of August of 2025, and they're trading now below that line right now. We'll go to a 1-year view. I am going to take these red lines off because this isn't really a bearish negative divergence because the prices are lower. So we had higher prices. Let me save this. I'll put my crosshair there so you can see what I'm talking about. We didn't get back to those highs, so we don't have higher highs, so I'm removing those red lines. Despite that, they are trading below an upward sloping 200. The 21-day has rolled over since about the 15th of January, is trailing lower. It crossed below the 50-day moving average. They are oversold at the moment. We've had a sell signal on them since about the 15th of January. PPO is getting stronger to the downside, so I don't think this is over just yet. Given that analysis, we're probably looking, it could go down as low as 126, maybe to 141, 139 or so. So 126 to 139, I think the momentum is building to go quite a bit lower here.
Thank you, sir. We got a lot of people joining. We got a big crowd today, Daryl. All right. We're going to keep moving and grooving. Bo is on the stream. Good to see you, Bo. And he asked me, okay, between the two stocks, Meta and Google, which stock would I own forever? And my answer is Meta. And it's all about, as of right now, Meta's price is more discounted. They have a lower market cap and they have a higher potential. More than 3.5 billion people log into a Meta app each month. They're building an AI business that is going to do video. It's going to do a lot of ad suggestions. I think Meta could be one of the most valuable businesses, period, on the stock market in the next 3 years, which means they're going to go from 1.5. Let me check my valuation here really quick. I think Meta can go from their current $1.7 trillion valuation to $5 trillion in the next 2 to 3 years. So I own both of them. They're both massive, big positions for me, right? And they're not getting any smaller. And I think Meta's stock is going to go to $1,000 per share. What I heard in the last earnings is that the core business is doing great, but the core business is going to be the jumping off point to what is going to be a lot of AI experiences that are going to change the game. And it's going to change the game for Meta. 3.5 billion people logging into a Meta app. That type of distribution is unrivaled. And I think in the next year, I think they're going to blow our minds. I'm already being blown away by Gemini and how good it's gotten. Okay. If I think about Gemini in the hands of 3.5 billion people, not everybody's going to take it and adopt it, but it's kind of game over. They already log into Meta. It's like, Shazam. Now your experiences are very different, right? And you think about the power that Meta will then have, which is with advertisers, right? If you want to be part of this ecosystem we've built, this is what they can raise their prices, they can command a bigger percentage of market share, all kinds of good stuff. So that's my answer, Bo. Meta. I like them both, holding them both. But could I see the awesome Google company go from 4.1 trillion to 10 trillion? Yeah, but not in the next 2 to 3 years. That's a lot of trillions. But I think Meta could go to 5 trillion in the next 2 to 3 years. So that's my answer there. Let me ask Daryl real quick, and then we're going to move on to eTOR. Which one would you pick, Meta or Google, sir?
I have both, and I think they'll both do pretty well. I have higher hopes for Meta as well, but I don't use words like forever. Yeah, I think that's always risky. I've seen too many stocks over my lifetime collapse, so I try not to use language like that. I am a long-term holder. Nearly all of my holdings that I have now, I've probably held for at least 4 years or 5 years, where the average time in the market's about 6 months. So I am a long-term holder, but I don't use forever language.
All right. So eToro, this is a new issuance. It's an issuance. This is similar to Robinhood, Charles Schwab in, I'm going to call it Europe. eToro is an Israeli company. They're doing a good job growing their business. Just the market hasn't had a whole lot of appetite to buy into these guys. Look at that. Just exactly what you don't want to see. The stock hasn't seen a lot of good investment. 11 PE ratio, 131% discount. And you look at the business, the core business, it's been growing. They're not showing any growth numbers here, but the growth has been good. Number of users, people that have accounts and all that good stuff. So I think it's a good business. When's it going to start to work? I don't know. It's discounted, but I need to see this trend higher. I need, and I think that's the question I have, is more of like down Daryl's avenue is, what are you looking to see that would tell you eToro is going to begin to trend higher? And it can go much higher because it's really discounted. I'm going to show my valuation real quick. Then I'm going to kick it over to Daryl, because eToro is discounted nicely, 70% discount. I mean, it's highly discounted. So when is it going to start to work? That's my question over to Daryl.
Okay, so we have a couple downtrend lines here. They've been downtrending since about 6 weeks after they IPO'd. They have a 21-day that's declining, a 5-day that's declining. They're trading under that 5-day for the last 4 or 5 days. They are extremely oversold at the moment with an RSI of 19. So investors are making a statement right now. We did have a sell signal on the 11th of December. We got a bit of a head fake here, and now we're on a downward trend once more, with the two lines getting further apart. And then I look at this accumulation. This is really painful when you see that much distribution over this time period. So people have been moving out nearly since day one, with the exception of maybe 2 months here where there was some accumulation. The distribution has been really painful on this one. We are oversold, so we might find some support here, but there's nothing. Whenever I look at these charts, I look at today and then look to the left because that's where I find support and resistance. But when you have a company that's this new in the market, there's nothing to look left of. So I don't know how low this one can go, but they are oversold at the moment. But all the trend lines are moving downward, so I wouldn't run in front of a racing truck.
Mm-hmm. Yep. Thanks for doing that, Daryl. All right. So let's see here. I just added PayPal. Looks like Tomas is on the stream to the list. It's down the list a little bit. Right now, we're going to turn our attention over to TMDX. TransMedics. Okay, so what's been happening with TransMedics? So it's been kind of, I'm seeing a trend higher.
You're not sharing.
Oh, sorry about that.
And what's the symbol?
TMDX.
Okay, thank you.
So overall success, 92% rise in TransMedics. It's been trending higher. That looks good. It's going to announce earnings on February 26th. The 1 month looks good, although it's really come down from $143 a share down to $132. Today it's down under some pressure. It's been growing nice and fast. Now, if I recall, it's their forecast that worries me. If I look at the growth rate on revenue has been really good. It's just not sustaining that high percentage growth. Like we saw Uber early in the stream, they're sustaining like a 20% growth in their big business, 50 billion in revenue. These guys are less than $1 billion. And it's beginning to really kind of slow down. The growth rate slow down is what's concerning. Now, this has improved since the last time I looked at it, I must say, because I was looking at a forecast previously that was really slowing down. And the slowdown is not that bad anymore. So I think it looks better. I'm going to relook at my valuation on TransMedics, and I'll share that with you in a few minutes. I like the growth. They don't have the most profitable business model. And I think they do consume some of that capital into their operation. You see that they just started to generate free cash flow. The margins are good at 60%, and profit margins look good too. So the numbers look good. Let me kick it over to Daryl. I'm going to take a peek at my valuation, and I'll share that with you after he's done.
So they are on a slight uptrend this year. The 200 days increasing, 50 days increasing. They are trading below the 50-day today. The 21-day is starting to roll over, and they're trading below that. They still have an RSI of 45. The PPO is still in bullish territory. I do see some distribution over this time frame, so I wonder what's actually driving the price higher, because we spent a lot of time in negative money flow. You can see these where it's below the midpoint. That's in distribution mode. So I don't know what's driving this one higher, but we're definitely in a slight uptrend as we move through time. I don't know anything about this company, but chart looks okay.
Okay. So let's take a look at their valuation. Okay, so this is where I'm at with their valuation, but I think this is a little dated. So let's take a look, update it, we'll go from there. Okay, so what I'm going to do is I'm going to copy this so I kind of see how it's changed and see what I can learn from the process. Okay, so we are now on the 4th of February, and we had a discount rate of 9%. The interest rates are dropping, so I'm probably going to adjust that. And I'm going to look at a screen to get my fundamentals. It's the stock analysis screen. Let's take a look at, so the growth rate was good on revenue. I'll get to that in a little bit. First, I want to look at my cash flow, free cash flow for the year 120. So, and they're growing better than that. So that's good. So $120 million. 15% is about right. So I'm going to go with 15%. I'm going to change this to 4. That'd be too aggressive on that. Now, cash position, cash and debt. So the cash is 466. And then 519 for debt. I'm going to reduce my discount rate to 8. And that looks correct. Let me change my note here. So we're not quite at a discount. The stock has risen a lot in the last year. Now looking at earnings per share. The earnings per share is expected to be $2.95 for this year. They're growing nicely. This is a good growth business. Margins were pretty respectable. 24, I'll go ahead and keep that 24 target. And the growth rate on profit is, this is going to be a little too optimistic. So I think it's priced too high by 17%. Investors are really liking the stock. Okay. And it's working for investors. It has been kind of not going up so fast over the last couple months. So it wouldn't tempt me to invest in the stock at this time. I think it's priced too high. Previously, the stock didn't have as much free cash flow to work with. So the cash flow really made the big move on the valuation based on discounted free cash flows. The earnings per share did improve as well. So that went up, but it's still under its fair price. I should say the valuation is below the current stock price. It doesn't offer me a discount. So it's going to be a pass for me. That is TransMedics. All right, so let's move on to BPOP. That's right. We looked at this before, and this is a bank. They focus on Latin America, and market cap has been going up 1 year, up 43%. And banks have been doing well. Speaking about Citi, JP Morgan has constantly gone up. It's a pretty big investment or pretty big market cap. This one's up 43% over the 5-year, up 136%. That looks real good. This chart's looking really good. And they paid dividend. Now with banks, we don't use free cash flows. Got to look at earnings per share and then the price to book. And looking at, we're going to get price to book here on stock analysis. Price to book ratio 1.49. If you look at the average for biggest US banks, it's like 1.7. And I've done that analysis because I've looked at banks. Banks are usually the first ones to issue their earnings, and they did that about 2 weeks ago. So this one is, we want the book value to be, the price to book ratio to be as low as possible. It's below 1.7, so that's favorable. That's positive. So it looks like it is got a good price to book ratio. looking at their forecast, for some reason, it's forecasting that revenue is not going to grow. That could be a little bit of bad news, but it's supposed to grow next year. So if they can outperform this number, I think the stock can continue to work. But if it doesn't, maybe they have, a negative perception from the market, maybe it sells off. So this would be one of the yellow flags that I'd put on the stock. Like, hey, what are they going to do? Are they going to grow? Let's look at the quarterly, kind of dissect that number a little bit. So they haven't announced this number. They're probably going to announce it, but I don't get it. Why would the quarterly show me growth, but the annual shows it flat? So maybe the data on stock analysis is it's not making sense. So Q1 growth. If this is correct, the stock can continue to work because it has a attractive price to book ratio. It's growing its profit. It's looking like a good stock. It's looking like a good stock, low PE ratio. It looks good. I think it's a solid investment. I know that these guys are not competing with like Citi, JP Morgan, those guys. They're taking a marketplace that they can probably communicate better with, better adapt to. This is a good idea. I like BPOP. It's a good stock. Good looking stocks have been doing well. I think it's going to continue to go higher. What do you think about BPOP?
Well, one of the first things I noticed, if you'd asked me here a couple of weeks ago, I do notice this cup here.
Mm-hmm.
And then we got a little bit of a handle. So if you'd asked me about the 2nd of January, what I thought, I would have taken the price of this rim, which is $125. I would have subtracted the low, which is $108. I'd taken that difference and added it to the price at the rim, and I would get $143. Look where it's trading today. So I could have told you on January the 2nd with about a 65% probability that it would be here within the next month or 6 weeks, and it is.
Thank you, sir. All right. So we've got the list keeps growing. And FYI, I've got a hard stop in about 20 minutes. So we're going to go through these quickly. And just real quick, it looks like Mike, the dividend investor guy, a couple weeks ago talked about Duolingo, and you said it could go lower, and it did. So 1 point Daryl on his analysis. Nicely done, Daryl.
The part where I thought you were nuts.
I want to keep it.
You're too nice. PG-13. You're too nice, Victor.
Anyway, good stuff there. Nicely done. So somebody wanted to talk about PayPal because, who can drive past a 5-car collision without taking a peek, right? Because this one certainly was a multi-car accident on the freeway. Boy, a lot of cars have been damaged as a result of this wreck. And PayPal announced that they're switching over their CEO. This is a highly discounted stock, no doubt. They continue to grow their business. And that's not the problem. It's the market doesn't believe PayPal has great ideas anymore. And the market's right. Like, I've been waiting for them to do something with their Venmo business. Their Venmo business is huge. Why can't you try something that's, a little crazy, a little innovative? And maybe you could have a giant crypto wallet. You should have gone all in on crypto, something like that, because the market is just looking at these guys like, hey, they're a payment processor and that's all they are. They have a new CEO, and FYI, the new CEO came from HP, a dying business making PCs. That's the wrong CEO, in my opinion. So I'm not going to touch PayPal. I think it's dead money for a while. It could be a value stock, like, oh, okay, I made a nice return. For all I know, it, goes higher from here because it's so discounted. Look at the where the stock's been. It's been trading as high as like $300 a share in the past, but I just don't see the strategy. It's certainly not like Meta. Look at Meta. Meta has a very successful business that's growing, and they're putting a lot of chips on the table, betting on the future. That's the right thing to do, because if you let another business grab the future and grab it and keep it from you, maybe you wake up and next thing you know, you're way behind. And I think that's what PayPal has is they've fallen behind. They got to take some chances. They got to go for it. So um, that's my feeling on PayPal. Qualitatively, can't touch it. Cannot touch it. Look at
Yes.
Google. Google bet a lot on this AI thing. Google bet a lot on Google Cloud, by the way. Google Cloud was not a business up until about 10 years ago, and they started betting a lot of chips on it. They were doing quite well with search. Their YouTube business was flourishing, but they're like, that's not enough. We got to keep growing to be a very relevant, important company in the world. PayPal doesn't have that. So I'm out. It's highly discounted. Okay, that's fine. But if I constantly spend my time trying to bottom feed and buy stocks that are really beaten down without a forward strategy that makes sense, I'm going to probably be distracted from my mission, which is finding great businesses that are going to be valued more over time. And it could be a business like Target. I've been talking about Target. It's a retailer, not the coolest business in the world, but I think their forward strategy is really solid. Their numbers look good, and I'm already making money on that. Your thoughts?
Yep. So, if anybody saw my video on December the 19th, when Costco was near their lows, I went and did some research on the volume, and I called the bottom within 2 days, and then we went on about a 20% run. I'm going to attempt to do the same thing here, but it's not going to be the bottom. So I'm going to put my crosshairs basically about right there. And I see, look at the volume bar. We're looking at this panel here. Whenever I see volume at that level, I see 1, 2, 3, 4, 5, 6, 7 times. Okay. I'm going to put my cursor on the first one. Look at the price up here. When we have that much selling, it continues to go down. Here, when we have that much selling, it continues to go down. Here's another one. We were kind of at the bottom. Here's another one. We were at somewhat of a bottom. Here, we had that much selling. We had 34% more to go. This looks like it could be a gray bar, which would mean buying. So I'm going to ignore that one. And I'm going to put my cursor here where we have this much selling and it goes down. So at least 5 out of the last 7 times, when you have this much selling, that doesn't mean that you have your last sellers. It means you're just getting started at least 5 out of 7 times. Costco is exactly the opposite. When you had that much selling, you're actually at the bottom. PayPal is telling me a different story here. I'm also seeing prices that I haven't seen since 2016, which tells me that we probably have, I mean, that's basically when they IPO'd. So I think we have a lot lower to go here. The volume characteristics are telling me we're going lower.
Thanks, Daryl. Good stuff. So somebody asked, hey, can we look at some of these financial companies? And a lot of these are rating companies. SPGI, which is the S&P Global Incorporated Company, FICO, EFX, Equifax, and then MSCI. Looks like Fair Isaac has really been the leader in appreciation over the 1 year. They're all under pressure. And when you think about these businesses, these tend to be pretty good businesses to own. Although this one's under a lot of pressure. Wow. 12.7% drop in the 1 year. 11.75 over the month. And the reason I say that these businesses to me are pretty solid is this is solid growth. It's been very sustainable. They continue to grow as the market becomes more valuable. And the free cash flow is really good. Margins are very good. Profitability is very good. So there's just a lot to like here. Very good looking business. The forecast, 35% discount according to analysts. And again, a lot of green on the screen. Green, 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 green. So these are really setting up nicely. I don't know why they're selling off for the 1 year. These are really good ideas. I would pick carefully and I would group these together, kind of see which one gives me the best value. SPGI is looking good. It looks good. And then not a bad idea right now with the stock really under pressure. And they're not going to announce until next week, but they've been really consistent. I think everything's selling off, it seems. And especially in this space. Let me look at the heat map really quick. Then I'll kick it over to Daryl. So these guys belong in this space here, and it's under pressure. So what do you think, Daryl?
We were looking at a lot of charts there, so you'll have to read them back off to me.
So let's just look at SPGI.
SPGI. Okay, I don't have a chart on that one, so we'll create one. Okay, let's see what we see here. So they're getting back down close to COVID levels. They're also getting back to price support that we saw back on the 5th of February. So if it breaks below where it's trading today through Friday, then we might have lower to go. But based on what I'm seeing here just quickly, I think it's at price support. So I agree with what you said, that if they're discounted, it's probably not a bad time to pick up these shares. Just keep in mind that if we have a downtrend over the next couple of days, that you may have to look a little lower, like around 419 or so.
Thanks, Daryl.
At least on that one.
And I've got 10 minutes to go, and then I've got a hard stop. So I'm going to try to cover 3 stocks here in 10 minutes. Plantir being the first, and it's really had a nice rise after the earnings, really impressive earnings, great growth, and now it's really under pressure. A lot of stocks in software are under pressure, as I mentioned earlier. This company just really impressive growth, very high growth. So that was impressive. And when we look at their forecast, it's expected. This is a high margin business, high profit, impressive growth going forward. It is an expensive stock, very expensive, too expensive for me. But I can understand the enthusiasm in the stock because it's just been getting it done on the top line growth. My valuation isn't going to come near its stock price. And I created a video for members yesterday or the day before, I think the day before. And I'm I'm showing that my value is $109 per share and it's trading for 142. So it's being priced at a 23% premium. But I've had Palantir at a premium for a while, and the stock's been going up for the last 3 years. So it's been doing great. Over to you, sir.
Yeah. So just so you can see additional history on these cup with handles. Back on the 1st of October, when I noticed this cup with handle, I calculated a price target at $207. Do you see what price it got to? $207. Keep an eye on these cup with handles. If you catch these early enough, with about a 65% probability, you can figure out where the price is going to go based on this pattern. So what are we seeing with Palantir? That was just a little bit of history because it's been here for a while. We are trading below an upward sloping 200-day, 50-day is moving down, 21-day is moving down. We are testing a support line right now. If this stays below at least through Friday, then this will become a resistance line, and I'll have to go find another support line. But I'm looking at around 129 if I were to look just quickly. Looks like about 129 to 131 or so. We do have negative money flow. We are very close to oversold, and the PPO is bearish.
All right, perfect. All right, so we're going to cover Novo Nordisk and CEG, and then we're going to conclude. Good stream. Thanks, everybody. Geez, we covered about 16 to 18 stocks. So it's been a pretty active stream. Appreciate everybody attending. So Novo Nordisk is under pressure, and just I thought they were going to start to rally higher. We saw a nice rally coming out of November, and then they pre-announced that their revenue forecast for next year just doesn't look good, and that's really sent the stock lower. And frankly, Eli Lilly is just beating these guys. It's no growth while Eli Lilly is growing. Competition's entering the market for their weight loss drugs. So this stock is just going to be untouchable for the foreseeable future. And that means the next 3 to 4 quarters, I'm not going to touch the stock. Once bitten, twice shy. And this one here is kind of bitten investors like 10 times already. So Novo Nordisk, it's had some traps for, people that like myself. I ended up buying a few shares here. I already sold my shares, got out of it, get this thing off my portfolio. It's going to be a distraction. So it's really been trapping a lot of people all the way down here. So not sure where it's going to go, but I can tell you this thing's just been abusive to investors. What do you think of Novo Nordisk?
You pretty much said it all. We've talked about this one many times, and I finally bought in when it started breaking above this trend line, but now I'm regretting it. So I'm not going to say much more about it.
All right. And then we're going to end the show with CEG. CEG. Constellation Energy under pressure. What's going on, Constellation Energy? Down 16%. And these guys produce and sell energy product services in the United States. It operates through 5 segments. And I would think that utilities have just been cleaning up. So why have these guys not been cleaning up? Their revenue is a little higher, and all the hoopla that I hear about energy, right? I would think that these utilities can grow their revenues much faster, but that's not the case. Although it's been green for 3 quarters, the forecast is going to tell us a lot. They had a contraction in 2024. Utilities don't make a lot of money. Profit margin, 11%. Free cash flow, negative, because they have to put so much money back into their business. Remember the comments I had on Tesla, Uber. The things I like about Uber is they don't have to put a bunch of capital back into the business to keep it operating or even grow it. These guys, it's the opposite. They have to put a lot of capital back into the business, and that's just something that I don't like. I want the company to sell a lot of their product or service, make a lot of profit, and keep it on the balance sheet. Give it back to us in the form of buybacks or dividends, or go acquire other businesses or grow your business organically. But just to put it back into the operations to keep the energy producing machines and plants going, just not a really attractive business for me, for my book. 58% discount, and that's because earnings per share looks good. They're going to grow nicely in 2026. The growth looks better. That looks pretty good. Got to admit. And their profits are going to grow, bringing down their PE ratio. It's still a PE ratio that, again, my investing style is try to buy growth stocks, try to buy high margin stocks. And this one is, I got to really hold my nose when I look at utility stocks because, geez, they burn a lot of cash. So looking at CEG, I believe I have a valuation on them. I've got them at a 59% premium because they don't produce free cash flow. I think I can get to a discount going earnings per share, but for me, for this investor, it's not an investment I want to make. What do you think of CEG, sir?
We'll take a look here. We have a bearish negative divergence. I did mention that the last time we looked. They're trading below a downward sloping 50 and upward sloping 200. The 21-day is declining. The 50-day is going to cross below the 200-day. If this price trend continues, that's referred to as a death cross. You want to start looking for where the bottom might be when that occurs. But I was warning about this bearish negative divergence for quite some time. And even more concerning is the level of distribution that began clear back in the 2nd of June. We did get some higher prices from there, but once it started declining, it's definitely on a pretty solid downtrend at the moment. We are getting into oversold territory. The previous time that I saw that, it looks like it didn't stay there very long. I don't know if I can look over more. This one's done pretty well over the long period of time, so they haven't spent much time in oversold. I don't know if the thesis has changed on this one. We'll have to continue watching it. We do have a support at a gap at about 244, and then you're looking at 230 after that. So keep an eye on those two levels. If it can't find support there, then you're going to have to look a lot lower.
Thank you, sir. Just buying some stocks over here. Give me a moment. All right. So, all right, guys. So great stream today. Thanks, everybody. We had a big group of people join us today. We appreciate it. Looks like the market is still selling some stocks, some big ones, and moving into some sectors that have not been in the game for a while, but now they're actively in it, like energy, materials, real estate, industrials. Looks like the bleeding over in software for the moment has stopped. Look at that. It's picked up a bit. Oh my God. If anything, they just deserve a day off. And Palantir's getting crushed, man. Jeez, what's going on? AMD getting crushed. Whew. Rough. Been there. So that's it, folks. We will be streaming this afternoon. Join us if you've got time. It's going to be at 4 p.m. Eastern. We're going to take on Google. We're going to take on that earnings. We're going to analyze it. We're going to talk about it in depth. and talk about any other pressing issues, maybe some other companies that are announcing this afternoon as well. And join us if you can. And any departing thoughts, Daryl?
Nope. It's been a busy week, and I wish everybody well.
Excellent. Take care, everyone. Talk to you soon.
Bye.